right, beautiful. So, first and foremost, again, this is related to the time aspect of things, right? And, it's something that he always talks about. It's something that I believe in, maybe for a different reason. But after just seeing the effectiveness of something like this, it's just kind of making me look a little bit deeper into this idea as a whole. Because, look, we can have great setups, and, I'm sure we see them all the time. But again, like, how can we be even more precise and nail these setups at specific times? Because I think it's fair to say that more often than not, when the time isn't really aligning, and what I mean by that is, if you're working with, a 11:30 or a 12 o'clock setup, to me, just again, everybody could be different here, but to me, like, I feel like the effectiveness definitely decreases based on the time. And what I mean by that is, if we're trading in one of these nice setups within that time frame, I don't know. I just don't feel as though it plays out as well as it kind of could if it were to take place, say, in a silver bullet time frame, whether it's 10 to 11 Eastern or 2 to 3 Eastern. So one thing that this is, again, it's an ICT concept, but it's something that I'm just thinking, like, in terms of like actual movement and again, having some sort of model. Like, to me, I'm not really interested in learning, another model or somebody else's or anything like that. What I am more interested in is, how can we kind of pinpoint and be as precise as possible to determine when would be a better time for our setups to play out with a much higher win rate, in a sense, right? And for the longest time, again, I've talked about it a lot, where I don't really trade the open, rarely ever. There are times, today actually, if I see something pre-market, I usually play around a little bit, and I don't typically go all that heavy with it. But if it's a decent setup, and again, the risk reward makes sense, I'll take something like that, and it worked out for me this morning. But I'm just thinking, obviously, for me, I feel the most comfortable taking these setups in between the silver bullet times, 10 to 11, 2 to 3. But are there other times where we might be able to, something so subtle? Maybe it's not a retracement into a discount imbalance. Maybe it is some sort of sweep of liquidity, or maybe it is even a setup that talks about some sort of imbalance, or whatever. But to me, you know, is there another time that we can look towards and feel pretty good about taking that setup? And even if it's not a setup that we particularly want, is it something that maybe we can just keep an eye out for and see? Maybe the setup's telling us long, but for us, using our idea of time and these specific time frames that occur throughout, would there be a favorable setup that could occur, outside? Or maybe, again, we might not even have to trade it, but maybe it's a way for us to deter us from taking a specific setup. So really, in short, something that ICT has been kind of introducing, and this, to me, I feel like this really started when that 2016 mentorship came out, and then it's kind of like slowly and gradually grown, and it's something that more people are using. But just the idea of these specific time windows, or he would call them like cycles, and how the market would operate on these 90-minute cycles, right? So I'm thinking, okay, 90-minute cycle, that kind of makes sense. I mean, it doesn't perfectly line up with the silver bullet hour or anything like that, but there might be something to it, right? We think about it, when we define the AM session, what really is our AM session? To me, minus the silver bullet hour, of course, but our AM session, to me, especially on days when you have data prior to market open at 8:30, right? To me, it starts at 8:30, and at that point, like, when's the next time, right? I don't particularly like the open due to the volatility, but really the next time window for me is that 10 o'clock. So I'm like, that's 90 minutes. That kind of makes sense, right? So if you were to move from there, then you look, okay, 10 to 11, maybe it's 10 to 11:30 where this silver bullet really is, technically designed to be. And maybe the first half, that 10 to 11 hours, when you really want the move to actually take place. And I've been getting a lot of questions about the silver bullet, and really, I mean, this is probably one of the shortest ICT concepts in reality. And to me, it's something as simple as a setup, whether that is a fair value gap, whether that's an order block, whether that's a sweep of liquidity, whether that's a breaker that gets touched, whether that's a mitigation block, all of those little setups that we've talked about over the last few months in this group. And if you're new, we'll get around to them. Again, it's not like there's 500 million concepts that we talk about. It's really the same ones over and over again, but just in different contexts depending on what we're seeing on a specific day. But maybe we want that move to happen between 10 to 11, and our specific 90-minute cycle does trickle into 11:30, because then from that point you talk about lunch, right? 11:30 to 1, right? I don't really look all that much from 11 to 12:31. And what I mean by that, it doesn't mean that I'm just like completely detached from the computer. There are days where I do that, but for the most part, I'll be watching, but I'll be doing something else. I'll be watching TV as well. Like, I'm not really locked in and looking for a setup at that specific time, because to me, it is a lower probability time. So then I'm saying to myself, after that lunch, 11:30 to 1, then what do we see next? And then it's like, okay, maybe this one doesn't line up all that great, but really the start of the afternoon session where you have that 1 o'clock to 2:30, that would be the next little set there. But we know that silver bullet is 2 to 3. That's what we've been taught by him, and how I kind of view it really ultimately moving forward. And I've had a lot of success within that specific time frame. So I'm thinking to myself, that's not really particularly straight. But he also he's been talking about this, and this is not something that I do. And to me, maybe with a futures contract, but I think it can get a little dangerous with options. But allegedly, this is not something that I've back tested yet either, from that 3 to 4 power hour or sour hour, whatever you want to call it. Again, quote unquote, allegedly, this is not something that I've back tested at length yet, so I don't feel all that comfortable saying that it's a surefire true thing. But allegedly, there is a silver bullet that takes place within that 3 to 4. One setup that occurs within that specific time frame, targeting whatever the specific draw on liquidity is at that particular point. And these are just specifics, right? So he's talking about that 10 to 11 and 2 to 3 specifically. But now I also saw, and this is what kind of brought my attention to it. I saw this a couple weeks ago. The final silver bullet hour that he introduced, I know this is going to sound crazy, from 7 a.m. to 8:30. I'm like, what the hell? So you have one in Asia, you have one in London, you have one 7 to 8:30, you have one from 10 to 11:30, quote unquote, with this 90-minute cycle idea. Then you have it from that 2 to 3 time frame as well. So now I'm thinking to myself, holy shit, if it really is all based on these cycles, how can we operate using this idea, right? So the one thing that, again, this is not something I've created, but it's something that I'm back testing, because to me, if I have an idea of specific cycles and how price would target those highs and lows within a specific time frame, to me, that can make things much more actionable. And here's what I mean by that. So the whole idea really behind this is, so you would be whatever the specific cycle was. So for example, we can use, let's look at our first little cycle from the morning, which would be that 8:30 to 10 o'clock. So let's just map out our highs and lows of that specific time frame. So where are we in terms of 8 o'clock? Okay, so here's our 8 o'clock low. Okay, let's mark this for now. Let's just make sure. Okay, so this is perfect. Ready? That's our initial low at 8 o'clock, or our first little time window, as one would call it, or cycle. And now let's look at our high from that time period as well. So ready? Let's look from 8 to 9:30. So let's see our high at 9:30. Got it. Okay. So that would be our immediate cycle. So once that ends, meaning we have 8 o'clock in the morning to 8:30 in the morning to our 10 o'clock. So this is at 8 a.m. This would not play. Let's see, where is it? Here it is. Good. Okay. So we'll look and see how price reacts to our previous cycle in our next 90-minute cycle. And here's one thing that you're going to notice. Look what happened when we took out the high here. Immediately retraced and ultimately goes down to our previous cycle low, which was that 940. So again, how is this useful? And I know it doesn't seem like it's all that mind-blowing or anything like that, but if we're to be able to segment these specific times, so for example, we take the, some would even say maybe it's an opening range type thing, but I think the opening range breakout that a lot of people use or preach or practice, whatever, I'm pretty sure it's anticipating breakouts, but with us having the idea or the understanding of that concept of liquidity, I think this could be like a slam dunk home run for us, really. And just having an idea that, okay, look, let's say we have our specific previous cycle high, previous cycle low. We take out that previous cycle high. Now, in this current situation, buy side is satisfied here. So within that current cycle, we can actually look for the breach or the low of that previous cycle here, right? Will there be instances where you'll get that breakout and what we've talked about, and something that we talked about last night actually, but when my model does end up completing, what do we look for in the next circumstance? And really it's a sweep of liquidity and a retracement lower, or it's that imbalance above and through previous buy side, which we saw in Tesla today. I'll show you guys that in a sec, but we'll see that, and that will be our continuation type move, in which would this really play? And at that point, probably not. But to me, on a day where directionally we're looking at it, and ultimately if we're just to look at this from a wide lens, it really was a pretty choppy day. And for me, what we talked about last night going into today was this was our hourly range, and the fact that we're still trading in the premium section, so premium would be above that 50% of a bullish range. The fact that we're trading up in premium, it really doesn't, I'm really not, I don't know how I want to put this, because again, ultimately weekly time frame, I am looking for higher prices. And when I say hourly, I am looking for us to retrace down here, which is about 200 points lower. I'm not technically bearish. The range is still bullish, but to see us retrace down here to me would make sense, right? But ultimately at this point, I'm not really looking for longs per se. So while our long setups did occur and they did play out, I mean, you have, look, ready, your low to high, here's your discount retracement, there's your run for highs. You actually turtle soup this low one more time and run higher again. So again, while there were still bullish setups that played, there really was no continuation. And to me, my explanation for the lack of continuation on a day like today would be, well, look, we got up into our hourly bearish fair value gap, and something that I like to preach, and not only to you guys but to myself, is that when I do see that first imbalance down on a specific time frame, preferably the higher time frame, really starting in an hourly chart, when I see that, at that point, I feel pretty good about looking for a retracement into discount of the range, which would be at 50% or below, and one of these imbalances specifically. And at that point, I'll look for run for highs. And to me, that's what's the word I want to use? It's really the highest risk, or lowest risk, highest reward type setup that you're going to get within a specific range. And the reason I say that is, of course, let's say you buy it at 50%. Your upside potential is 50% of the range. Your downside potential in terms of where the trade really goes bad is 50%, right? And that's why, I kind of focus on that little golden pocket, 62 to 79%, because to me, that is the best or most optimal place for entry. And the reason for that is because what are you really dealing with to the downside? And in reality, your max downside risk here is 38% of the range, where your upside potential is 62%. And as you get deeper into discount, your risk reward, it's leaning more towards reward at that point. And we know, and again, this is something that we can back test, this is something that I post often, is can we, really, why this area? I wish I could tell you, but it's something that repeats over and over again. And if it's something that you're kind of like, I don't know about this. You could check out the Mando model little folder on Discord, or just use backtest it yourself, and you'll just notice that oftentimes, for whatever reason it is, price likes to retrace into discount. And if you're just to use like a general idea or reasoning as to why it would do that, I mean, it does make sense. Nobody wants to overpay for anything, right? That would make sense. You go to the supermarket, you go to buy something, and you see that it's overpriced, or it's you're probably not going to buy it. Or you're not going to buy a TV that's overpricing itself when you could have it at a discount, I don't know, but you're not going to buy a TV a week or 2 weeks before a Black Friday sale when you can get it on sale a little later if you were to wait. But you also have to be okay with potentially missing the trade in itself as a result of that. So why am I tying in this hourly range with what I just talked about these time cycles? And the thing that I'm saying is, so at this specific point, I don't want to say that I'm bearish, but I can absolutely see a retracement down into here. So if we can use the idea that we just had using these specific cycles where we're taking liquidity, we're taking a previous cycle's high and then looking for our previous cycle's low, if we can use that in confluence with what we're seeing on a higher time frame, meaning although there are bullish setups on that smaller time frame, they might, and they could still play out. They did multiple times today. But what I mean by that is we're not going to see that continuation type move if we really buy into the idea that this range is set here. I feel pretty good about the range being set here, and I'll tell you one reason why I guess a little bit on the fence. Ultimately, I believe that we're going down here, but the one difference that we had earlier this morning, and this is why I was a little bit like, I don't know, about going short and stuff. I did go short, and I actually made money this morning before the market even opened. But ultimately I kind of got lucky in a sense, because immediately after I closed, we had that 9:30 rip higher, which was, where was it, like, no, where was, did it still paint the red candle? Yeah, so it was off this, but that new high that was set, that would have stopped me out if I didn't take profits. So I essentially, I was wrong, but I was able to make money, luckily, because I was aggressive with where I was placing my stop and all of that good stuff. But ultimately, we had no bearish imbalance here on ES, while on NASDAQ we did. So while we did respect it on NASDAQ, looking over at ES, it didn't exactly line up, and that was where I was a little bit on the fence in general. Now we'll notice that we actually do have bearish imbalances here on both. So to me, I feel much better about that retracement back down into discount, and I think tomorrow will likely be the low of the week. There may be a Wednesday reversal. That's a possibility, but I'm not done with the upside idea still. I mean, really, at what point would my idea change? And it's really not until we lose that level on ES, which is 49.59, and over on NASDAQ, this low down here, which is, hold on, I gotta redo the fibs here, I guess. Right there. So 17,382. At that point, I would likely flip and look for lower prices. And at what point would I flip back? And ultimately, I would then just zoom out more to a daily or a weekly perspective, where I would look for discount on the weekly time frame, which is still much, much lower. But do you see how me waiting for that little level of confirmation, which is 17,382, that will then make me feel very good, which is 17,382, I think the level was. So let's say from here. Okay, so from this point here down to 50% or discount, I can be looking for lower prices, because I have that confirmation on the hourly. I'll have it on the daily, because I'm sure we'll have a market structure shift on the daily. And if all of that aligns, now I have 1,000 points where I feel like I can be on sides. That's great. But again, I would prefer, even in this specific situation here, we're dealing with 200 points to get into discount. While I'm sure there's going to be a setup that's nice. To me, once you get around that 50%, it gets a little dangerous to be looking for even lower at that point. So that's just a couple little things. And that, again, it's just, we're in a bullish range. I do believe we're going to get that retracement. So if I can use these specific cycles as a way to kind of play the liquidity sweeps on a smaller time frame as a way to look for lower
You told me you love
prices.
me today.
I think that would be great. So I don't know who just said that, but
You said because I'm always meaning because I hit him.
uh-oh.
Because
Yeah, Clunk, I'm gonna just mute you real quick, man. But anyways, so that is that, and let me just see. I had one more note that I wanted to say. Yeah, here, this ties it all together to me, at least. So if price goes from the previous cycle again, we'll just come over here. So if we're going for a specific low to a high in a a bullish environment, and then we can look for our previous cycle's high to go lower in a bearish environment. And ultimately, when I'm looking at this point of view, again, ultimately we are bullish, but what do we know when we get that retracement on the hourly, or that one fair value gap or imbalance to the downside? To me, that sets a range. So what is that telling me? That technically from this point here, I would prefer not to be bullish, looking for, let's say we're at 25% of the range. We're looking for a potential 25% while risking a potential 75 downside. And I know nobody's trading it with that big of a range. I get it, but it's just based on principle. It would make much more sense for that discount retracement to occur. Ultimately, in order to get us to where our higher time frame draw on liquidity would really be. So it is pretty interesting how this is something that, again, I'm not totally sold on, but it's something that I'm going to continue to kind of back test and practice. And it's something that I'll probably just throw around in the chat and just say, hey, look, here's our previous cycle's highs and lows. Let's take a look and see how this plays out. But I think it could be good for a little group idea in general, because again, ICT always talks about time and price, time and price, time and price, time and price. So to me, the price thing it's not a problem of mine. I feel real good about how I can determine when price is likely to move, in which direction. Really the time aspect of things can get difficult, whether that's us talking about how far out in options contracts we should get, or simply, us, why is it taking so long for it to just get up and go? Like, what, and to me, using this idea of being able to plot highs and lows of a specific cycle, we can, be even more pinpoint and precise. And that's really all I'm looking for. If I can get it to a point where I feel like my precision is top notch and it's better than what it is right now, I mean, I'm kind of at a point where I will at least give it a look, to try and improve, because again, I posted it a couple weeks ago, but I'm at like 73% or something like that in terms of win rate. And again, it's like, at this point, it's been pretty consistent for a while. It's actually improved since July. Even I think it went up like 11 points since July. How can I get even better? And I think it could be something as simple as just incorporating time, because again, to me, there's so many different explanations, and I wish I really had a concrete one that really just made sense, right? For example, why is 10 o'clock the silver bullet? Maybe it has something to do with clearinghouses and when specific orders are actually processed and go through. That kind of spurs the algorithm to go look for liquidity quicker. And if that's the case, price is going to move a little faster, and that's ideally what we want. We don't really want to be sitting in chop all the time, and I'm sure a lot of people got chopped out today, and I think that is it's something that you might feel like, oh, I'm never going to be able to overcome this. I promise you, if you continue to stick with it and just watch price, there's going to be certain staples that you're going to see, and you're going to say to yourself, okay, do I really want to be involved in this? Knowing that on a day where price is moving true and how I would prefer it to move, it's going to be so much cleaner, and I could still make whatever money that I'm leaving on the table today another day. That's perfectly fine. I think everybody just kind of wants to, I don't want to speak for everybody actually, but a lot of people, I think you just immediately want to put the pedal to the metal. You need to start making that big money today. And on days where price is going ballistic, like on Friday, putting the pedal to the metal, to me, that's just you kind of getting lucky. But on a day where we really don't have all that crazy kind of movement, you're just asking for trouble. You know what I mean? And I hate to say it, but it is something that I think with time everybody will learn and just understand. And it's especially on Mondays where you really don't have all that much high impact news data. Um, you just want to push the buttons because it's been 2 days since you last pushed the button and you're just itching to do it. Um, maybe the criteria for your specific entry model should be a little different. Maybe you should hold the standards a little bit higher on, say, a Monday with no data versus a Tuesday where you have 8:30 data. And, again, through experience and through backtesting, you've noticed that on Tuesdays that you have data at 8:30 in the morning, typically price action is smooth and it moves pretty well in terms of however you're whatever type of setups you're using, whether it's the stuff that I'm showing you guys here, whether it's something that you've felt like you've mastered in the past. But there's so much little things that kind of go into this. And I know I talk about this a little bit more now because, a lot of people in the group, we basically had the same people here since July. Of course, new people come in, but the people who we were here with in July have all pretty much been here. So you've probably heard me talk in these meetings, hundreds of times already. But I really don't get into the psychology aspect of it. And one, it's like I'm really not a psychologist. I just like try and tell it like it is as best as I can. And one of my biggest things about trading is, of course, I'm not trying to say that trading psychology doesn't matter because everybody's going to be in that position. But what I will tell you is I really don't think that trading psychology matters whatsoever if you don't know what you're doing. And in short, what do I mean by that? If you don't have a specific setup that you're looking for, if you don't have any level of discipline, to me, to acquire the discipline that's necessary to do this, that's coming even before you even consider like psychology, frankly. And the reason I say that is because, look, if you have no discipline, does it really matter how you're reacting to how your what your P&L looks like or how a trade is setting up for you while you're in it, right? You're going to be sweating that out either way. And I think that's like a subconscious thing where you just don't really trust in yourself because maybe you didn't do the work that you needed to do, or maybe you're just buying off air. You don't know why you're specifically taking a trade at a specific point. But that understanding, to me, that's when you start to understand this and you have that clear-cut trading idea set prior to you even entering the trade, then to me the psychology will kick in. But I don't think it'll be as harsh as what some people are feeling right now. And the reason why I say that is because if you're kind of sweating it every time that you take that trade right now, to me that can be kind of dangerous. And why I say that is because if you're sweating it, that means that you did not even consider what would be one of the most important things to me prior to even identifying a trade setup. And it's, what is my potential loss in this trade, right? And it has to be, you have to be disciplined enough to say, okay, if I'm entering off of X fair value gap, I mean, let me see if I could just cherry pick like a stupid setup here, but let's just see. This place. So if we're just looking at it, and this really didn't turn out to be a great trade whatsoever, but let's just say we're looking at this fair value gap right here, okay? And prior to entry, you go into this thing and say to yourself, okay, I'm going to buy it off this fair value gap. And you don't identify really where your stop loss is going to be or anything. You have no criteria to the trade. Let's say you take that trade and it's going well, and then you see candles like this. You're probably going to absolutely shit your pants. And listen, I'm not trying to be funny by saying that, but I've been there, so trust me, I know you're going to be shitting your pants when you see this type of candle down, right? And you're probably maybe if you don't have any type of risk management whatsoever, maybe you didn't move your stop and you're kind of just hoping for a little turtle soup action here, which ultimately you would have gotten this situation. But if you're looking at it from this perspective and you're just absolutely panicking yourself, freaking yourself out, now when you get this up move, you're probably going to panic. You're probably going to sell and be like, oh, look, I'm going to get out of it here because, there's a bearish fair value gap here. But did anything structurally change? No. So again, just kind of circling back, to me, it just makes so much more sense that if you really were able to dedicate a lot of your time right now, don't worry about pushing all the buttons. Everybody wants to push the buttons, and there are some people who, um, we've seen it. We have a ton of funded traders in here now, and that's amazing. But we've also had a couple that are struggling, and to me, it all kind of circles back to the same thing. And I'm not going to throw anybody under the bus by name, but there are situations where I'm literally like, 2 days prior, I can just see it by their aggression. They just want to trade. They want to get this money. They want to do this. They want to do that. But they're pressing it so hard. And if you're not lucky, like with Friday's PA, where was Friday? And I don't want to say lucky meaning that you're not a good trader or anything like that. Don't take it that way. I'm saying lucky in terms of you're getting a beautiful day to trade longs, right? Where if you go balls out, you're killing it, right? But if you're trying to do that on a day like today where it's just not there for you, it's going to kill and it's going to drive you absolutely crazy. Even if you start out green on the day and you start playing with fire and you keep on going back thinking that you're going to be right again and again and again, when there's no setup for you, you're just asking to be burned. And that kind of happened multiple times today with some people that I spoke to, and that's discouraging. And again, it doesn't come down to I hit my daily profit goal, I'm done. To me, I don't really like that mentality, to be completely honest. If my setup that occurs over and over and over again, and it's something that I back tested over and over and over again, continues to present itself, just because I hit my daily goal doesn't necessarily mean that I am done for the day. If it's still playing, I'm going to play it. But guess what? Nothing's going to change in terms of my discipline and where I have predetermined where I'm getting out of this thing. You can't play the quicksand game, right? If you're playing, let's say, this fair value gap here, and you're saying to yourself, oh, look, we bounced out of that fair value gap, nice. And then you get the move below, and you're at that point, you're just, oh, well, I got another level down here. I guess I'll wait for it to come down here. You're done. You're burned. Any option, unless you have months of time, that option is going to get absolutely hammered, and you're going to be looking at your brokerage, and you're going to see that red, and you're going to be driving yourself absolutely nuts. As a result of that. And to me, that is terrible for you. One of the biggest things for me is get off to a good start. Make that first trade of the day, make that first setup, and just make sure I lock in something, even if it doesn't end up going my way. Like the short that I took this morning, monetarily, it ended up being a decent amount of money, but I did not get the move I wanted it to get. I was very aggressive in terms of where I moved my stops and profit to, and just took it. It didn't go my way. I technically lost in terms of my idea, but I was still able to make some pretty nice cash. I think it was like $900 on a move like that didn't go my way, right? But starting off the day green, going back and looking at your account, you just feel so much better about it. And at that point, where a lot of people would say, oh, you know what, I'm going to keep pushing it, and maybe taking trades off setups that don't really exist, I'm saying to myself, oh, I'm going to be so picky, and when I get it, I'm going to absolutely hammer it, because you're not pressing at that point. At that point, I'm almost at my goal for the day. If I get it, great. And that's the way I always look at this. If I get my goal, great. If I don't get it, it's okay. There's going to be a day where I'm going to go above and beyond and blow my target out of the water. It just kind of has to meet the criteria. And if it's not there, I cannot try and make it there. And again, it's something really, I think this is really the most experience type thing. And again, it sucks. I know a lot of people don't want to hear that, but like, how do I avoid the chop trading? And really, it's something really as simple as, can I avoid not entering off of nothing? So if there's no like 5-minute, 15-minute fair value gaps, imbalances, then I really don't want any part of it. Simply put, I'm going to just avoid it. And if I don't have a good feel in terms of where are we going next, right? So around this time, 11, 12, 1, listen, I started off good. I had my first trade of the day on NASDAQ, which was great. Tesla dominated for me today. So there were a few names that were, picking me up, and I didn't really feel like I needed to push the envelope at all. But around this time, again, going back to what I talked about before on ES, I was a little unsure in terms of like, look, NASDAQ has this bearish fair value gap. I think we're going down to 50%, but if we looked over at ES, you're going to notice we did not have that at the time. There was no imbalance here. So I'm like, is the range really set? They're not really acting together. So I'm not all that sure just yet. So I just didn't do anything. And, you know, honestly, I, does anybody like, I don't really care about that. I mean, you know, you might say to yourself, maybe if we melted down, I'd say, oh, fuck, I should have known. I should have known. But ultimately, like, it doesn't really affect me anymore. I don't know. It used to. Trust me, I would be so upset when I'd miss out on these massive candles and such. But when I break it down into just, you know, a points thing, and I know everybody says don't focus on your P&L, focus on this, focus on that. The way I look at it though is like, really, I'm not looking for all that many points, right? 20 points on NASDAQ. And again, you know, depending on what you trade, you know, SPX is obviously going to be much more leveraged than, you know, maybe an individual name where the contracts are pretty cheap. But, you know, the way I look at it on, you know, something like NASDAQ or really SPX, ES, anything like that, or anything that I'm trading with size in. So, for example, Tesla today, like any of those names, like, do I really need that big beef of the move, or do I just need a good chunk of it? If I can get a good chunk of it and not have to get the entire thing, that's fine. I'm still going to make a really nice amount of money in, you know, X amount of time. It's not going to take all that long. So having that perspective as well tied into, I'm not looking for the big home run slam dunk. If I can chip away and take out, and you know, maybe a situation where it's like, this is a little ugly, but you know, we can use this as an example anyways. But if we were just to draw a range, we took out this low with this price run, there's our retracement up into discount, and then there's our flush, right? Ultimately, you know, this would be where I'm really looking to take profits. And you'll notice that we ended up going like 40 points below. While it sucks not being in that, you know, to me, taking this move from discount up here, 36 to 80, that's like 56 points. That's more than enough in order to kind of satisfy me for a specific point in time. So I think, you know, I know that was a lot, and it was a lot of, you know, I don't want to say just, you know, psychology behind it and stuff like that, because again, I think if you're not really at the point where you understand why price would do something in a specific moment in time, I don't really think it matters all that much, your psychology. If you're buying off air and just hoping for the best, or you see someone on Twitter talking about it and think that, you know, because they're talking about it, it's got to be a slam dunk home run. You know, I think
Hey, man,
psychology just doesn't matter. Yeah.
Bitcoin's almost at your target.
No, is it actually?
It's at 57,000 now.
All right. You knocked me off the rocker. I'm glad. I was ranting a little bit, but let's look at some names. All right, let's look at Bitcoin. Bitcoin, I think yeah, let's look at it from, beautiful. 59, dog. 59. Look at this. This is unbelievable. See, I wish we would have gotten a retracement into here. Really, Bitcoin has not given many opportunities for, you know, any entries. I know a lot of people aren't really trading that specifically, but you'll notice what I had today. I had this alert set here at 53,297. That was the high of this weekly bearish fair value gap, but also I have the monthly up, so I can pull up the monthly, because we did have a monthly bearish fair value gap, and we are currently absolutely shredding that. But my model completes on Bitcoin at no. Where's our yearly? Sorry. Hold on. We don't want the month here. Yearly. Where's the year? 12 months. Beautiful. Okay. There it is. My model completes on Bitcoin at 69 flat, baby. And to me, at this point, this is a low resistance liquidity run. This was our last little imbalance that we were dealing with. And while ultimately the weekly could still pull back and just give this high wick up there and, you know, be that speed bump that we expected, but right now this is strong as can be. Just outstanding. What a move. So yeah, Bitcoin really just, it's been an absolutely awesome trade. It's awesome to be a part of. So, oh shoot, sorry, I'm just seeing all you guys have stuff on the side. All right, Greg, yeah, we'll get to those. Oh, there's Henry. Palantir. Love the energy level. Oh, you want lower on Bitcoin now, Ryan?
Oh, I just want lower on NASDAQ.
Yeah, I think we can go about 200 points at least. Racist AI on Google, yikes. I tell myself all the time when I'm scalping in a trend, no way that I'm unlucky. Oh wait, I tell myself all the time when I'm scalping in trend direction, no way I'm that unlucky that I would accidentally scalp short at the very bottom. Well, you can look at it from, did we sweep any sort of liquidity? Because although it could still be bearish, you could be buying your shorts in premium. And if you're buying shorts in premium after liquidity sweep, you would anticipate some sort of retracement back up to the mean, or 50% or discount of the range. And I've been there too, where you're expecting that breakout and you just don't get it. You're buying your shorts at a crazy time. But yeah, so all right, let's look at some names. If anybody has any other names, feel free to throw them up on the sidebar, but we'll run through a few of these here. So first, let's go to Affirm. Holy crap, I can't believe Bitcoin's ripping. It's amazing. All right, so here's Affirm. We'll go on the weekly first, and if the setup makes sense, then we can crunch it even smaller. So again, this is we talked about this a little bit last night, but I don't want to say I'm not a fan. I will be a fan shortly, but I just prefer it to come on down here to discount of the range. You're still inside that bullish breaker. It is kind of alarming that, well, I don't want to say alarming. It just might be one that I miss in this situation, because look how perfectly we bounced last week off of the midpoint of that bullish breaker. Low, high, lower low, break above. Like, we're talking to the tick. We're not saying, oh, like we held this level. Like, this is absolutely to the tick. So to me, that's like, oh shit, okay, maybe I miss it. We also got into that bullish fair value gap. I would be surprised, but ultimately, if you're bullish on a firm here, you're gonna want this weekly candle to close above really that high and create some sort of bullish order block. I don't know if a firm has earnings or anything like that, but you are working on this bearish volume imbalance here. So, I mean, preferably for me, I would prefer it to get on down into discount prior to ultimately finishing up my model at 52. So, just the way I look at it, could you buy it up here? Yes. Could you get a better entry? Potentially. Is the upside here make a lot of sense? Yeah, kind of. What is that, like 15 points? Could be pretty nice. But I am kind of, I guess you could say, like, anal about me getting my specific entries, because I hate being in it and I'm like, okay, I know it's going to go up here, but I would prefer not to see red in my port on this name, and I don't want it to take forever. Like, I just kind of want it to be good and kind of, I don't want to, I'm not like sniping bottoms, but I'd prefer to be close to the low when I enter. I'm not afraid to see a little red, but I don't really want to have this massive range potential, which in reality, I mean, if we were to go and fill this breaker, that's 6 points lower. Your position could be at a much better price technically. So that's just my idea. If I miss it, I miss it. So be it. It happens. But again, I think it's helped me overall. I'll tell you that. Just being very particular with not trying to jump the gun on certain things and letting it actually get down into discount. And I know not everybody trades the same way as me, but it's just hard to argue with the idea that price, for whatever reason, likes to retrace down into discount of a range. Wish I knew. I think it is just some sort of algorithmic coding situation where it just happens over and over again. And it really, until once you see it, you cannot see it. And I know I say that all the time and it sounds stupid, but like, it's hard to disagree with that, because again, it just does. So that's why I'm very particular. If I miss something up there, I miss it. So be it. It is what it is. But I would just prefer to be as precise as possible, always, and not have to deal with that emotional roller coaster of being in drawdown on it even for a little bit. I'd prefer to get in, a couple bucks down here and there, but especially when you start trading with some size too, you really don't want to be fucking around with your entry and seeing it go down $6 and you're down, $3,000, before you really even start to pick up some steam. Because then at that point, I felt like in my past life, I was always trying to just fight to get back to even or make a couple dollars on it instead of actually like trying to make money on it, So I would just much rather wait for it to happen. If it happens, great. If not, so be it. But that was kind of like end phase today. I mean, I don't even know where end phase finished out, to be honest with you. Okay, so it really didn't do all that much, but I had alerts set for end phase, didn't quite get there, took off this morning, but ultimately it kind of came back down to earth at the end of the day. But here's Palantir, also Greg, and I think Manhattan, you're watching this one as well. But yeah, currently, am I sold that the range is set here? No, there's been no imbalance to the downside here, so to me, it would make a lot of sense for price to ultimately reach that 27. But does that mean that we need to see 20 again prior to that run up higher, or are we immediately going there? I don't know. Again, this is not really a setup that I would take at the moment. I have shares of Palantir, and I've had them for a long, long time. And I'll be honest with you, I have zero intention of selling here, or really, maybe I'll scale some and just take a little bit off here, but because I am starting a newer position in something, so I'm just kind of taking some winnings off of other stuff and putting them into the other name. But at this point, like I don't think Palantir's done here. Ultimately, I would love to see Palantir just give us a new high. I know this is not going to happen overnight, but I'm thinking big picture on a name like this. It's hard to dispute, and I know I don't talk all about that fundamentals and all that crap, but I've never really heard anyone talk about the actual product. And I know people always used to say, like, what the hell does Palantir even do? But no one has ever talked negatively about Palantir in that light. Maybe financials and all this shit, yes, but in terms of what they actually do, in terms of, like, I actually have an app. I know this is a little off topic, but I have this app. It's called, hold on, let me pull it up right now.
The CEO is a big dork, but
Carp,
he's
yeah,
smart
he's
as
a
hell.
wacko. Yeah, he is. He's a little eccentric. Fuck, what is this? Oh, it's like Me Prism, it's called, and basically it's Palantir's technology, and what they do is they scan all of your Google, your Gmail, your Hotmail through Microsoft, your Live, whatever email addresses that you have. They basically scan and see how much money these companies have actually made selling your data, and essentially you can use this technology that's offered by Palantir as a way to block that, and for you to actually get paid for the data that you're selling. And it's just interesting. I mean, I really haven't pursued it much, but it was amazing. I think, like, when I first looked at it, I think it was like 2 years ago. It was like, yeah, you've basically, they've sold your data for like $40,000, like, to X companies, and it shows you a list of all the companies that actually paid for your data. It's not you specifically that they're targeting. It's obviously a group of people, but it's like, what the fuck? So I think there's absolutely a place in this digital age for something like Palantir. But a couple of relative equal highs on the 1 hour. All right, yeah, we'll pull up a 1 hour on Palantir too. So let's see. Here you go. So you can look at it. Oh, nice. Ready? You have your little bullish price run right here. Low to high. There's your discount retracement so far. Okay, so you have this high. Yeah, this is a bullish trend as well. Yeah, I think Palantir is probably gonna go higher first. Let's see. Yeah, we took out these highs over here with that. Yeah, no, this is really what I'm looking at here. Okay, so actually here's a pretty good example. You're gonna notice. So look, what do we have here? We have a low, high, lower low. So you have your bullish breaker, which would be this candle here. But we drop below that. Like, why would that happen? That doesn't add up. and this really, I hate to say it, but this is just a failed setup. They happen. It definitely happens. But if you look at it from this perspective, like, were we really in discount at the inception of the breaker? And ultimately most of the breaker was in discount, but there was a deeper imbalance that price was satisfying down here. So that's why even when we get breakers, I still would prefer them to be in discount, just for a reason like this, where looks pretty good, it looks nice, but ultimately anything in discount to me is just much more high probability. So instead of just kind of throwing money at the wall, at least have that. Yeah, I can look at Carvana for sure. I think there's a few more names. Let me just get to them, and then we'll get to that. I'm just going down the list here. Oh no, it might be all. Yes, MSTR 2000 Mara. Let's get that 33. I think it was. That's where my model would complete. We can look at CRM too. Let's look at Carvana first. This one actually just completed my model on the weekly here. So ready, here it is.
Completed your auto and after hours, Mando.
What did?
Mara
Mara?
completed. It's at
Fuck
like
yeah,
32
baby.
right now on Robinhood.
Let's go. All right, we'll check that one out too. But I'm a little alarmed because we do have earnings. Do we get that explosive move like we currently have on Carvana, up and through previous buy side, or do we see a sweep and retracement? So ultimately, just looking at Carvana here, so my model did complete last week. So we can kind of run through this multiple times, but here would be the first time where you have what was the price run that took out that high right here. Whoops. And it's from this low to that high there. There's your discount retracement. There's your run for highs. Okay, so at that point, we're complete. Now what? Okay, well, what was the price run that took out these highs right here? And we go from here, low to high. I already have it set. There's your discount retracement. Is there a bullish imbalance down here in discount? Absolutely, right there. And there's your run for highs. So now at this point, we say, what was the run that took out this high right here? Okay, we can come on over here. And to me, the price run is from that low to, let's just go through each one and confirm. Nope, it's going to be just right here. Because why would I say that? To me, even though we have this right here, we did take out multiple sets of highs in the process here, and this candle was our discount retracement here. And that's why if you look at my tweet from 2 weeks ago now, at this point, you'll notice I say high 40s is a gift. And what I meant by that is you have your overarching weekly range with that imbalance here, but you also have on a smaller little range setup on this weekly. I know it's only a few candles, but price retraces back down into that 48. So if we get it, it's gonna be nice for a little run higher. And I wish I wasn't away, or I would have played that as well. But I've played Carvana multiple times over the last couple months. So, but right now this is what we're currently at. I mean, to be generous here, and you do have a pretty big imbalance here. So ultimately, if you're bullish on this name, in terms of like a continuation at this point, could it go higher? Sure. And for me in this situation, I would wait for it to get into discount again, and then let's just confirm it on like an hourly time frame, because I'm sure you have a massive range. Yeah, you do. Okay, so here's that. Hold on, let me just get rid of some of these old levels here. Okay, so here's your hourly range. What was the run that took out that high? Low to high. Yeah, we don't have any discount retracement. So ideally, in my situation, just by shrinking our range, and instead of buying off air, we can use some substance here, and we see it's a huge range. Don't get me wrong, this is a big ass range. So if we were to see downside, just know that you have this huge hourly imbalance, which 7 points, but that 7 points has a potential of a 23-point net to the upside. To me, are much better there. You do have this bullish imbalance right here that we held up on, but here's the thing. We're technically still in premium or overpaying for our range. Do we know this range is set? No, not necessarily. I'm not trying to say that there's no chance that we go higher from this point, but as someone who's not currently in the trade, to me, buying at this point, you know, it's just not it for me. And the reason I say that is because I know that if our range is gonna get set, we're gonna have to come back down here to 50% at some point, right? So for me to buy up in premium, you know, I would just really prefer not to do that, because all that's doing is leaving me open to potentially more downside. And then obviously you'll notice the one thing about Carvana here, and you know, I'm not like a squeeze guy or anything like that, but we're really not working with all that much in terms of resistance over here. It's been pretty much just a meltdown, or it had been throughout 2022. So, I mean, this thing could get nutty. I'm not trying to say that it is. I'm not trying to speculate that, because I think a lot of these names really are speculation like that. But if we're even just to look at what our overall range is, 50% of the range is at 190.23. Like, just massive. And again, we know price likes to come back to discount for retracements. So I'm not trying to say this is going to happen today, tomorrow, whatever. But to me, my bias is bullish on a higher time frame till we get to discount of the range. And then from there, if this company falls off the face of the earth and dies, so be it. But at the moment, just kind of what I'm looking at for Carvana. So I hope that helped a little bit there. Google. Okay, so we'll go Mara, Google, Roblox, and then I'm calling it quits. So let's see. Mara. Okay, so did it get to 3130, Ryan? If it did, my model's complete.
Yeah, it got the 32.
Fuck yeah. Alright. And that's even better. See, I'm a little on the fence now, because it's like, look, we have earnings. This is going to be a definitely we swept buy side. 32.74 would be my next target here. Now on some kick-ass earnings, now we're talking. Look what we're really working with. This imbalance is filled, 40 to 41. So I don't really anticipate this acting as all that much of a problem. You're working with this untouched imbalance from 47 to 48, and then above that, above this high, which is 57.66. Oh my god. Yeah, it's a killer. That was a great trade, and I'm so happy. I've been kind of playing the ebbs and flows. I've not played options on this once. I'm a little sickening, but just buying shares on it has been awesome, because I really have been able to just kind of play the game with it. But what was the other one that we were gonna look at? Google. Yeah, Google shit the bed. Structurally, still intact. I know it was disgusting, but we're still in this kind of a bullish range. So what was the run that took out that high here from, really it should be there, that low to that high? There's your discount retracement. Of course, this weekly candle is not confirmed, but a move below 136.26 actually is really disgusting on Google. And from that point, here's the thing. Let's look at this first run on Google. Okay. Did we get the discount? 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 So that's what my range would be looking like moving forward. So that's a pretty big ass range. So if there are gonna be retracements in specific names, I mean, this could be one of them. You know, again, it's really pending this, but you'll notice how I'm using this smaller time frame range, while ultimately I just know the bigger picture here, just knowing that we never retraced into discount in this entire price run. But very similarly to NASDAQ, we have 1,000-point range to get into discount on the weekly. So, you know, maybe for another time. But I don't like how it's been order block, bearish order block, bearish order block. And, you know, ultimately, if this closes the way it does, this is going to be another bearish order block. So that's Google. And then what was the last one that we wanted to say? Roblox. Yeah, so Roblox has relative equal highs. Ultimately, I think that's where it's going. It's actually not bad where we currently sit. So when would this be voided? Ultimately, if we were to close the weekly below this level, and I don't know if there's, oh, it already had earnings. Yeah. Yeah, I kind of like the Roblox setup, to be honest with you. Multiple sets of relative equal highs, 47.20, 47.67. Here, there's a bunch. And think about it. What had to have happened here? Somebody had to go short. What had to have happened here? Somebody had to go short again. What had to have happened here? Somebody had to go short again. And think about it. At each one of these, notice how those orders, those stop orders, right? They were not taken out because